In our newest stocks breakdown for Shift4, this one is finally trying to act like it's seen enough downside for a while, emphasis on trying. Welcome back to Fintech Spy, where we don't just trade the volatility. We zoom in on it, overanalyze it, draw 3 different fib levels, argue with ourselves about risk management, and then make fun of the whole thing. If you're new here, hit that subscribe button for more chaotic Fintech breakdowns, terrible market analogies, and occasionally accurate memes. Let's hop right into Shift4. Quick reminder, I am not a financial advisor. This is not financial advice. If you're making real trades based on a parody segment, you probably shouldn't be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. Let's start with the weekly chart, our medium-term view. On the weekly chart, we finally have something that looks like a real attempt at a bottom instead of just another stop on the way down. We've got a solid green candle, not a tiny pity candle, and it's coming after a long stretch of pain. Stoch RSI has started to curl up from below neutral and is working its way back toward the middle of the range. That's usually the early, maybe I'm done suffering for a minute, signal for momentum. At the same time, MACD is tightening up and looks like it's flirting with a bullish crossover instead of drifting farther apart like it has for weeks. Does that guarantee the exact bottom is in? Absolutely not. We could still dip a little lower or retest support just to keep everybody honest. But structure-wise, this is the first weekly candle in a while that doesn't scream ongoing downtrend. It quietly suggests the trend might finally be cracking. Medium term, the weekly is basically saying, I'm not healed, but I might be done falling down the stairs for now. Zooming in to the daily chart, our short-term view. On the daily chart, Shift4 just pulled off a stunt we haven't seen since October. 2 big green candles back-to-back that actually look like they meant it. After that burst, we did print a red day, but the recovery intraday was strong enough that it felt more like profit-taking than abandoned ship. The catch is momentum. Stoch RSI has been pushing up toward overbought, which makes sense after 2 strong pushes in a row. You don't get that kind of move without stretching the rubber band a bit. The silver lining is that today's selling pressure helps bleed off some of that froth without completely nuking the structure. If we can see a few sessions of controlled chop or mild red while Stoch RSI cools back down toward neutral, that's the ideal reset. Price holds most of the gains while momentum reloads. If instead we see Stoch RSI roll over hard and price follow it straight down, then those 2 green candles become less trend change and more, thanks for the exit liquidity. Short term, the daily is basically Shift4 saying, I can move up. I just need you not to panic every time we get a red candle. Next up, the 4-hour chart, our intraday view. On the 4-hour chart, you can actually see the new behavior starting to take shape. For the first time in a while, we're putting in a series of higher lows instead of just rolling downhill like a sad shopping cart with a broken wheel. We haven't fully broken the old downtrend yet, that bigger picture line in the sand is still hanging overhead. But this new pattern is exactly what you want to see if the market is going to rally the troops. Buyers are starting to step in a little earlier on each dip instead of waiting until absolute disaster prices. The main issue here is that RSI on the 4-hour has been living in overbought territory. Great if you're already in the move, stressful if you're late. What we really want next is a reset, a pullback, or sideways drift that lets RSI cool off without completely shredding the structure of higher lows. If we get that calm reset, the 4-hour becomes the launch pad for another leg higher. If instead RSI resets through a full-on dump, then this was just a cute little detour before returning to the regularly scheduled downtrend. Let's talk options, because nothing says emotional damage like watching leveraged opinions collide with choppy price action. Looking at the January 16th options chain, you can see a classic tug-of-war playing out. The put crowd is still very much alive, positioning for one more leg down, while the call crowd is out here manifesting continuation to the upside, like this is the comeback arc. Both sides seem weirdly comfortable around that $65 level. You've got roughly 2,000 calls sitting there and about 1.3 thousand puts. That basically turns 65 into the emotional battleground for the next 9 days. It's the line where both bulls and bears are quietly saying, yeah, this is probably where the real fight happens. If price hangs out near that zone into expiration, you'll get maximum pain energy as both sides watch theta eat away at their conviction. If we start to drift meaningfully above it, the call side suddenly looks a lot smarter. If we slip below, the puts start looking less like hedges and more like victory laps. Either way, that chain is screaming indecision with leverage. Exactly the kind of setup that can turn small moves into big emotional swings. So what's the outlook from here for Shift4? For Shift4 traders, this entire setup looks like a potential character development arc, but we're still in the early episodes. The weekly finally hints that the bleeding might be slowing. The daily is trying to prove those back-to-back green candles weren't a fluke. and the 4-hour is drawing higher lows while screaming for an RSI reset. If buyers keep showing up on dips and the momentum indicators cool off without price completely rolling over, this can morph into an actual trend shift instead of just a relief bounce. If they don't, then the January 16th chain turns into another case study in why leveraged opinions plus choppy price action equals emotional damage. If you agree, disagree, or think Shift4 is just winding up for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If you think this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below: coffee, memes, or setting alerts and walking away. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech spy microscope. No guarantees on price targets, but we will provide world-class over-analysis and high-quality sarcasm.